Hello, welcome back to Dukascopy TV. Today we're focusing on the Swiss economy, but we're also going to be looking at the deleveraging effect brought on by UBS's announcement back in October that they would be shredding 10,000 jobs over the next 3 years. Well, in the studio with me today is the Chief Economist at Stigma Parnters, Valerie Lemaigre. Valerie, welcome to the studio.
Thank you.
UBS announced a couple of months ago that it would be cutting a huge number of jobs over the next 3 years, 10,000. How in the mid to long term is this sign of deleveraging going to affect the economy and of course the Swissie?
Well, this is really a big issue for the Swissie and the floor that the central banks try to maintain. Why? Because by doing this deleveraging, which is required by international regulation, which is required by the too big to fail regulation. Commercial bank in Switzerland, we know that the size of the commercial banks is really big. It's 5 times the GDP, while on average in the Eurozone it's 3.5%. So the leveraging is necessary. The problem is that as the share of foreign assets in the total book of commercial banks is very important, it's above 50% of the total asset. What they are doing is that they are deleveraging or reducing their balance sheet by shrinking the foreign assets and in particular by shrinking the euro assets. So that means they are selling euro and repatriating their funds in Swiss franc in Switzerland, and this is putting pressure on the floor.
Okay, now we've got a graph here in the background which shows the external financial position. We can see the noticeable deleveraging there on the right. Can you just talk us through this graph a little bit, Valerie?
Yeah, just to mention how the pressure could affect the strategy of the central bank. If you look, well, most of the people are aware that the Eurozone is putting pressure on the Swiss franc because of the uncertainty in this zone. People like to invest in Swiss franc. But this is, if you look at the last period, especially in 2011 and the first 2 quarters of 2012, the portfolio issue or investment inflows by European is really a marginal issue to compare with what is the grey bar line, which reflects other investment in the balance of payment jargon, but which is mostly flows coming from commercial banks. And when we refer to the repatriation of external assets, this is included in these other investments. So it shows you that the current pressure that the ECB is experiencing is really due not only to the Eurozone uncertainty, but also to the deleveraging of the commercial bank system.
And you can see clearly there, it's very high. Let's move on, Valerie. How is the Swiss National Bank reacting to all this?
Well, the issue is that if you have on one side the current account surplus, which is very important in Switzerland, increasing, and on the other side you have other inflows which are not linked to commercial trade but to also the financial activity, especially the financial investment, then you have massive inflows. And to compensate for that, the central banks has to react and to, let's say, purchase some euro that their commercial bank have previously sold. So that really the way the central bank, is reacting to this deleveraging of the commercial bank system. And in one sense, the central bank is in a contradictory type of objective, because to promote price stability and to promote the financial system stability, they have to intervene on the Swiss franc and to defend it, in the sense that they have to start to purchase euro to weaken the Swiss franc. But on the other side, by promoting the stability of the financial system through the leveraging, through restructuration of the balance sheet, they are prompting the commercial bank to sell their euro, and on the other side the central bank has to buy those euro that their commercial bank sold. So that's really a tricky strategy, which is the best practice for this type of small economy exposed to export and with a big financial system. So it's the best practice, the floor system. But on the other side, it has contradictory effects, and that's what they try to manage with all these interventions that they did. And the last figures of Q3 was confirming that this trend is still on in Q3 because they had to intervene massively by 60 billion in one quarter. So that was confirming this issue.
Okay, I mean, still with the economy, focusing on the Swiss economy, moving slightly away from the Swissie, if we're looking at the literal effect of this deleveraging, say for instance on employment levels and on the economy, perhaps consumption, how is this actually affecting the Swiss economy and Switzerland as a whole? Because obviously if you've got swathes of people, particularly say financial professionals, leaving places like Geneva, for instance, in Switzerland, is that going to have a big effect on the workforce in the country?
If you look at the figures that were announced by UBS, 2,500 jobs cut in Switzerland, the proportion is relatively small. But globally, what we have seen in the labor figures, the labor market figures, is that they are showing a sharp deterioration recently. It's not yet in the figures of unemployment rate, but the growth of employment, there are contraction of employment already in Switzerland, and the resizing, let's say, of the banking system, of course, will weigh on the economy. And if we look at the graph on the consumer confidence, what you can see is that the consumer confidence has dropped already, while retail sales or while the consumption was still okay, but figures that tells you about the perspective of the consumer are really deteriorating rapidly, and that's probably due to the perspective of employment. And the financial system is, of course, contributing to that.
Okay, well, we've actually got a graph here of the private consumption. I mean, obviously, it's coming up to the run-up to Christmas. Talk us through this graph, if you could, a little bit there, because you can see that it's definitely tailed off towards the end.
Yeah, so what you can see is that the retail sales are really still strong. But we have already seen some sign of deterioration on the consumer confidence, which could prevail already in this period of Christmas, while maybe it's a parenthesis in the whole year. But the effect of that will be more visible in 2013, especially because the figures of the labor market are coming to deteriorate in 2013.
Okay, so it's worth obviously keeping an eye on the consumer confidence there, Valerie. But I mean, overall, when we take all this into consideration, I mean, how long do you think that deleveraging will last? Well,
I think deleveraging could continue because the debt of the commercial bank system is still at a high level. It's above the 120% of GDP, so it's still high. The size of the banking system is still 5 times the GDP against an average, as I said, of 3.5. So it could last. I mean, it's an issue that is required by regulation, so that could continue to have effect. And if we talk about the floor and the pressure on the floor, people most of the time mention the Eurozone problem and uncertainty as being the main factor of supporting this floor. I think we don't have to forget that the leveraging will continue to put some pressure on the euro floor. And if we look at macro picture of the foreign asset, they are still 280 billion of euro in Swiss banks. So of course they will not reducing to zero, but we still have some margin of pressure coming from this side.
And the SNB wouldn't be too happy with that, obviously, as they're trying to maintain that for
That's a challenge.
Okay,
yes.
Thanks Valerie for that. One last question which we ask all our guests, which is the Dukascopy question. Now, I have a list here on the screen. Now, out of real estate, equity, bonds, gold, cash and oil, if you had $1 million to invest in right now, which would you pick?
Well, I would keep the US dollar, especially keep a part in cash, and to put some risk on it. instead of focusing only on gold, I would really introduce industrial metals. But it's just an issue to higher the risk of my portfolio there.
Any particular industrial metal?
Copper could be an issue because it's really undervalued for the moment. Yeah.
Okay, great, Valerie. Thank you very much for joining us in the studio. That's all from Dukascopy TV today. We'll be back again, of course, next week with further updates and interviews. But until then, have a great weekend. Goodbye.